This morning we want to look at receipts and payments account and income and expenditure accounts for non-trading organizations. It's prepared and presented by Mr. James. Okay. So just to recap, the three types of financial organization that we have to learn to prepare financial statements for, the limited liability company, the cooperative society, and a non-trading organization. For the limited liability company, we have income statement, appropriation account, and a balance sheet. We have covered all those, except we have not looked at the balance sheet here yet. This we will look at next term. Then we have the cooperative society, for which we prepare income and expenditure account, appropriation account, and balance sheet. Again, we haven't looked at the balance sheet here yet. We'll look at that again next term. Then we have non-trading organizations, sometimes called non-profit making organization, for which you prepare income and expenditure, receipts and payments, and a balance sheet. Okay, today we are going to look at the income and expenditure account and the receipts and payments account. Right. Some of the accounting terminology that we'll come across and what they are compared to what we have done before in profit making organizations compared with non-profit making organizations. The income statement or trading and profit and loss account is called income and expenditure account in non-profit making organization. Okay. Because they are non-profit making, they do not trade. So they cannot have a trading and profit and loss account. So what they have is an income and expenditure account. In profit making organization, you will either get as a result of trading your net profit or or also called net income or loss. In a non-profit making organization, you get a surplus or deficit of income over expenditure. Okay, since they are not trading, they cannot make a profit. So if their income is greater than their expenditure, we call it a surplus. If their income is less than the expenditure, we call it a deficit. Next, we have what is called capital and reserves that you have in companies. In the non-profit making organization, it is called accumulated fund. Okay, all their surplus that they make from year to year is accumulated in a fund, hence the name accumulated fund. Okay, the accounting equation for the profit making organization is assets minus liabilities equal capital. For the non-profit making organization, assets minus, this should be liabilities here, that's a typo error, I will correct it. So assets minus liabilities would be equal to not capital but accumulated fund. Okay, we want to look first at the receipts and payments account. And we have here on the screen a format for it. It's similar to a cash account. The receipts of on this side and the payments on this side, and you have a column for the amount. Okay? The yellow box here is for the total of both columns. They should be equal. You start with your balance brought forward from the previous period, the balance of cash that you may have, and then you list all the areas where you will receive money from. In non-trading organizations, usually receipts come from subscriptions. Uh, if you belong to the organization, sometimes you have to pay a fee annually. That is called a subscription fee. Okay, so you will get membership for a year or for a lifetime or whatever. Okay, next we have donations. Some people would wish to donate money to a club or a society. It makes up a part of their receipts. Bar sales, also called bar takings. Sometimes the club or the organization will, the society will have a bar. They run a bar for refreshments. So when they have events, and the sales from the bar is, comes under receipts here. Then you have other things, fundraising activities that they might have. All the money that they collect from it comes in here. Add it up, and you will get a total here. From this total, you should be paying out your money here for different things. Football clubs and cricket clubs and so on have grounds that they have to pay groundmen wages to repair it. Then for the bar across here, you have to buy stock. You may also pay a rent, printing and stationery for when you have to print things. And then if you keep your money at the bank, you will have bank charges. But there are other items that may not, all clubs and societies do not have the same type of expenses to pay. Okay, so when you're looking at the accounts for a club or a society, what you have to distinguish between is receipts and payments, whether an item is a receipt, you're receiving money, or whether you are paying out money. And that's the difference. You don't necessarily have to know what the expenditure is for. All you have to know is whether it's a receipt or a payment. The receipt, it comes on this side. And if there's a payment, it comes on this side. And that is for a period at a time. Once it falls within your period, it will be entered on either one out of the two sides here. And then you balance the account, carry down your balance here to the next period here. Okay, let's look at a real one. We have a receipts and payments account for X Club. You see receipts on the side, payments on the side. There should be a dollar sign, but I took it out of our English textbook and I have a pound sign here, right? So notice you have bank balance here. So this club is keeping its money at the bank. Okay. Subscription received for 2015, 2016, 2017. Notice the year, the period is for this year. But they are receiving, some people didn't pay in 2015 and they paid in 2016, right? It's still, once it's received during your period, you have to record it on the receipt side. So 2016, and some people like to pay in advance for 2 or 3 years, still enter it on the receipt. Okay, so this is not following accruals or accrued expenses and accrued income that we learned at about the beginning of the term. Bar sales, all the bar sales that you receive, all the money that you receive at the bar is here, right? Notice you do not minus the expenses from it. All the money that comes in, you put it in here, and on this side you have the expenses. Okay, donations received 800. Okay, on the side, if you look at the items carefully, you'll notice all of them are payments that you, things that you pay money for, right? So payment for bar supplies, 38,620, wages, groundsmen, assistants, barman, bar expenses, repair assistant, ground upkeep, secretary expenses, transport costs. Okay, when you are down the side, you'll get this total. You bring it across here, and you minus these, you will get this balance here. Okay, it should have been brought down here for the next period. Okay, so that's your receipts and payments account. Let's take a look at the income and expenditure account. Okay, income, there's two sections, sir. One for income and one for expenditure. And this two could be done side by side, or you could do it in this one under the other. All right, this method is preferred, and I think when CXC prepares your booklet, your answer booklet, it's going to come something like this rather than side by side. Okay, the sources of income again is subscriptions, donations, bar profit, fundraising activities. Okay, um, but there's a difference between this and the receipts and payments account. Here is only the income is what is due for the year, whether you receive it or not. I'll repeat that. The income from these items is what is due for the year, whether you receive it or not. Okay, so if people are owing subscriptions for the year, you'll still include it here. So subscriptions here would include all that you collect for the year for that year, add on what you didn't collect but was due for that year. Okay, that's called subscriptions in arrears. Donations, all that you receive during the year, and the bar profit, only the profit for the year. This would be the bar sales minus the bar expenses. In fact, you have to do a trading and profit and loss account for the bar, and only the profit comes in here. Fundraising activities, you take the receipts minus the expenses and you put it in here. So this will be coming from the receipts and payments account. And then we left the expenditure. The expenditure, you will get them in the receipts and payments account, except for the depreciation. Some clubs and non-profit making organizations would have non-current assets or assets that last more than a year, and they will have to calculate depreciation again as usual on it. So we total our income, we total the expenditure, we just minus the two, right? If the income is greater than the expenditure here, we will get a surplus. If the expenditure, however, is greater than the income, you will get a deficit of income over expenditure, right? You might, the initial thing you might want to think is that you cannot have a deficit, right? Because you can't spend more money than you receive. But what happens is money also comes from surplus from previous years. Okay, So you can have a deficit of income over expenditure in a particular year. Let's look at one here. Right, we have Balgreen Bowling Club income and expenditure account for the year ending 31st December 2016. Now CXC will give you a mark if you have this in 3 lines, right? Okay. This, like I said, was I took it from my English textbook, not a CXC textbook. So they can head it up this way. We still have to go with our who, what, and when. Okay, the income from this is collection at matches and profits on refreshments, right? So this is the bar here, and this bowling club apparently does not have subscriptions and did not receive any donations or anything like that. They just have collections at matches. When they play their matches against other clubs, they collect fees for you to enter. And then you have the profit. Notice it is the profit on the refreshment. Okay. And you total it, you get that total. With less expenditure, rent, notice you have your prepaid rent here that you are minusing from the rent that you paid. This is for our next period. Printing and stationery, we are adding on the amount that we owe in the accrued expenses. Okay, so you still have your accruals and your prepaid expenses um, in this non-trading organization. Secretary expenses, repairs to equipment, groundsman wages, miscellaneous expenses, and another thing to note is the depreciation calculated. This is straight line method expressed as a percentage. You get 720. Add up these, you get the total expenditure. We take it and we minus it from there. The income is greater than the expenditure, so we get a surplus of income over expenditure of 17,760. So it's not a difficult exercise, right? Uh, we can know how to do this, and we can get full marks when our income and expenditure account comes in our exam. Okay. Um, this brings us to the end of this presentation. We will, like I said in the chat, this would be